cover these. So, thanks for the request. Remember, don't forget to get my free training underneath. Like, share, comment, follow, subscribe, and come and chat with us in the Discord. So, on your monthly to start off, nice and easy, straight away, you can see that you are well off these key moving averages. Price has come up from this point down here after a lower low. Again, like I was just saying, you had something similar on your New Zealand dollar. A lower low, and you've just had complete up move. If you put it up to the 12 monthly, it's just basically 2 years straight up, although the first year is a very thin and lean candle. If you look at your stock oscillator, okay, you've had it sideways for a long time, although it is overbought. The price still remains high. But again, and if you've seen my Swiss yen part, I was talking about it before. If you've got an overbought stock oscillator and the price is way up, like I've said, and it's well off these MAs, do not be one of those people who says, oh, it can't go up any further just because I say so. It always can, and it will many, many times. That is what kills people trading, because their risk is so high because of what they think is going to happen. And a lot of the time, what they think is far from reality. Okay, so your risk always has to be proportional to reality. That's what I always say. The recent times you've seen, and there's a couple of things I'll talk about with this, is sideways movement. So you've had this more or less since April, I would say, in a tighter consolidation since July/August. And that's what price is doing at the moment. It's going sideways, sideways, sideways. It doesn't want to fall. Clearly, if there was a strong enough short bias, that would cause the market to fall. It's not happening, okay? So this is an instance where the market has gone up and up and up despite what you think, right? So just bear that in mind. Now, what you can see at this current point on local price action since August, so since you started going more or less sideways, is the following. I'm not particularly a pattern trader, as I always say, but you can see a higher low there and lower highs there. Now, when this happens, it mostly goes on and on and on, but what you can see is every single push is getting tighter in terms of margin. In other words, support down here where your key moving averages rest, and resistance up here where you've got the top of your trend line coming down, is getting closer and closer and closer and closer. It's like going into a mouth, okay, or a crocodile's mouth, and getting further to the back, and eventually you get swallowed if you do the wrong thing. But there will be people who are saying, wow, I've noticed this and I'm going to short here at the lows, I'm going to buy at the highs. That's not the right thing to do, okay? The reason why is because it goes against natural market principles. If you could have bought it already, but anything down here, in my opinion, is a long, because you've seen a higher low, a higher low. Why would you change your bias? You've seen it happen twice. Okay, you're trading based on facts and probabilities, so I would rather be long at that point. If you were long, I would consider locking in gains and holding if you can, so you've mitigated your risk. And I would just look to exit and get short higher, okay? That is what I would prefer to do, and it's just trading in line with natural market movement, because that is, and we're still on the weekly, so you have to understand that this is more or less mostly a longer term market. That is your high market value for shorts, and this is your high market value for longs. And it's the reason why I'm saying that is because it's based on what you've just seen occur not long ago, okay? So you would expect the same thing to continue on statistics, on probability. Okay, probability is always based on fact. You can't have odds of something happening, okay, without going off some kind of data. And that is why trading is all about probability. It's going off it's looking at what's happened before and going off it for a future reference. Now, the uptrend has been significantly strong because you're following your key MAs. There's no really big dip, but you can see it's stalling now, okay? So if you do end up going lower towards something like this, all I'm going to do is take it long, okay? Because I'm looking for lower prices and bounces within price rejection. which you've already seen at this point. Okay. If it goes higher, I'll short up here. And if it goes beyond that, I'll probably short above the previous high. Okay. So in other words, if you look at your sideways movement, probably the most basic way to understand this, you want to be long. Well, ideally, I would be long lower like this, and I would be short here. Now, because you can see those candle wicks really clearly at this point, which is great, all of these candle wicks to the upside and the bottom side are getting closer and closer and closer and closer together. Okay, and eventually that will end. It always does. Okay, like you had here, look what happens. There'll be many people who thought, there's no way this is going to fall. And then, oh, a big green candle appears. So you've got to make your risk tied to the fact that if you're going to short at that point, you're well aware that at some point you're going to go up or down. You don't know which, so you need to change your risk based on where you are in the market. If you do go higher, like I said, the fact you've already hit short here and it hasn't done much it tells you that there's not really much impetus there. So I would probably start to space out my short entries above that previous high. Okay, and they would probably come near 174, so a lot higher up. But in other words, I'd rather short near 167, and if you get anything further, I would really space out your entries for long-term swing shorts. If I wanted to buy this, it's going to have to come down significantly. Probably first to 1614, further to 160. That is your EURAUD. I'm going to do your Euro New Zealand now. And it's much of the same. Okay, it's fairly similar, because if you look at your stock oscillator now, what has happened is it's stayed at the overbought part because it's gone sideways for a significant period of time. Okay, so like I said, there'll be many people who see an overbought stock oscillator and they think, wow, I can sell everything. But then suddenly it goes sideways, it doesn't come down. And that will happen very often. And it can go on and on for years, like it has with your Swiss yen, your dollar yen, everything like that. So just be careful. Again, I would rather be short at the top and I would rather be long nearer the bottom. If we escape that sideways movement, I would rather short higher up. If we escape it to the downside, of course, I would rather get long lower down. Okay? And I'm going off what is true based on probability, and probability is based on what has happened before. Look where you fell from there. Look where you fell from there, and there, and there. It's happened loads of times. You fell from here, and you've risen from there. Same there. It's very, very repetitive. And thus, there's probability. If you watch a horse race and the horse wins one race, what happens to it in the next race? What happens to the odds? Then it wins again. What happens after that? And then it wins a third time. Do you really think they're going to give you high odds on it? No, they're going to say, wow, it won the first time, it won the second time, it won the third time. It's just your way of getting at what is true based on probability. And you can only do that by seeing what's happened before. That is what makes price action. The point of price action, in a nutshell, is to understand what has happened previously and be able to read that on a chart. Okay? And the reason why I trade like that is because it's a naturally factual process. Everything I post doesn't say, well, I think maybe because this is happening, that's happening, and this central bank's doing this, and in the New Zealand economic zone, they like shearing their sheep 4 days early or something like that. So therefore the price is going to, it's just ludicrous. All it is a reason that you're making up to make a decision, right? So if you think something is short and your reason is purely based on what you think, that is not a factual basis. And that is the same as gambling. Effectively, you're going to a horse race, you're looking at a horse and saying, wow, that one looks good. It's going to win. So I'm going to bet all my money on it. Why would you do that? Why? People get the same thing when it comes to investing. They get overtaken by this idea that they are the person who knows. They know what's going to happen based on what they think. I don't do that. I just go off what I can see. If I can see it and I can manage my risk appropriately, I can have a long-term process. So thanks for watching, guys. I hope that helps. to EURAUD